I am I'm the founder of Small Entity Solutions. I am also an accountant and a small business consultant. I hold a Become accounting degree from the University of Johannesburg, as well as a postgraduate diploma in business administration from the Johannesburg Business School, which is also part of UJ of the University of Johannesburg. What you can expect in tonight's session is an introduction to individual tax compliance, what we mean by compliance from an individual tax perspective, the different types of income and supporting documents that you need to be aware of, tax deductions that could be applicable to you, auto assessments versus manual returns, the difference between the two, and who should be looking out for what, common mistakes and how to prepare. And then right at the end, we'll have a Q&A session where you will ask all your questions, either relating to something that I covered in the session or something that I did not cover in the session that you feel we need to discuss. Okay, so during the session, you will not be able to ask me any questions. You're welcome to post them in the chat, but I won't be able to see them. So maybe you just want to make a note of them somewhere and keep them for right at the end when I change the settings for you to unmute yourselves and ask your questions. What is individual tax compliance? So when we look at tax compliance from an individual's perspective, it's a bit different to companies. We are now looking at when should you be registering for individual tax, right? And this is mainly when you start working. When you start working in South Africa, you need to go to SARS and get a tax number. You should register for individual tax. When you start working, your employer, if they do everything right by the book, because there are some who don't, but if they do everything right by the book, they should ask you for your tax number. Same as if you open an easy equities account, for an example, they will ask you for your tax number. We'll touch a bit later on why that becomes important for them to ask you for your tax number and how it plays a role in your taxes. If individual tax compliance is also about declaring all your taxable income, right? So all the income that you make, your salary, your side hustles, your rental income, you need to declare that, and that is all part of individual tax compliance. Keeping the supporting documents for all the things that you are submitting to SARS is part of the compliance. Whatever that you submit to SARS, you should always be able to back it up with supporting documents that are relevant to whatever that is. If it's income, you must be able to prove the income. If it's expenses, you must be able to prove the expenses. Submitting tax returns on time. This is a big, big one. So SARS lately has been on a spree to make money from penalties, right? Rightfully so. The law exists. It is there. We are aware of it. If you don't submit, you are charged a penalty. And people who have not been submitting for some time would have heard from SARS by now. If you haven't, then hopefully you have a chance to make it all right before they reach out to you. But a lot of people have been seeking help, saying SARS said I owe them penalties for non-submission. I have not submitted for this and this years. There's a client who spoke about a return from 2012, just a few days ago, if not yesterday. So people are receiving some communication from SARS regarding non-submission. So if you are submitting your returns on time to SARS, then you would be tax compliant in terms of your individual tax. Individual tax compliance also refers to paying your taxes when they are due, right? So making sure that whenever your taxes are due, you pay those taxes before the due date, before they go over, to avoid interest. Okay. Why is compliance important? Just as I just mentioned, you avoid penalties, you avoid interest, you receive your tax refunds a bit faster, you are in better standing with banks, it's easier for you to apply for visas, it's easier for you to get bond approvals. If you are not taking care of your taxes, I think we can all agree that that is the bare minimum you can do as a decent citizen. And if you're asking the bank to trust you with a house that costs more than R1 million, the least you can do is submit your tax return every year. Like that's the bare minimum that you can do as an outstanding member of society is submit a tax return, because what are you doing with a home if you are not taking care of one tax return a year, right? No judgment, but I'm just saying, um, these things just make it easier for institutions to see that you are responsible. You are a responsible citizen. You are in control of your finances, of your responsibilities, of your compliance matters, right? So it also shows, it portrays a good image for you in these institutions where you need to prove that they can trust you with big amounts of money or with a large responsibility. Understanding the individual takes here, this is where a lot of people get lost a bit. So the South Africa's tax year runs from the 1st of March until the end of February the following year. But where people get lost a bit is when we say in this tax season, and when we say it's the 2026 tax year, then which month particularly are we referring to? I need you to remember this. Nah? This is how you're going to remember it moving forward. If we say we are, so number one, you need to know that the tax year runs from the 1st of March to end of February the following year. Okay. In 2026, the tax year ended in February 2026, and that is the year we say the 2026 tax year. So the 2026 tax year is the tax year that just ended a few months ago in February. When did that year start? Last year, March. On the 1st of March 2025 until the last day of February 2026, that was the 2026 tax year. Currently, we are in July. Nah? From the 1st of March 2026 up until now, going to the end of February 2027, that is the 2027 tax year. So your salary that you're getting this month end falls part of the 2027 tax year. Because why? Remember, I said in that year, the February of that year, we will say, so next year, that February, we will say the 2027 tax year ended in February 2027. So then when did it start? You go back. It started on the 1st of March, 2026. Okay, so very important for you to understand this, because then you will understand if you have additional income that you need to declare to SARS. When do you start calculating that income? Which months are relevant for the tax submission that you are doing? So even for this current tax season, very important for you to understand the tax year, from when until when it runs, so that you know what are the income and expenses that are applicable to the current tax return that you are submitting. Right now, in this tax season, we are submitting from the 1st of March 2025 until the end of February 2026. That is the 2026 tax year. We might be in July, but we are not submitting anything for July. We are not submitting anything for June. We are not submitting anything for April or even March 2026. Our submissions now, they start from the 1st of March 2025 and they end at the last day of February 2026. Okay. This does not mean any other tax years you can't submit for. I'm just trying to explain the tax year in detail, how it works. We look at the different types of income and the supporting documents that may be required when you submit your tax return. Different types of income. You could be earning income from your employment. So you are employed in a 9 to 5, you earn a salary, you get your IRP5 at the end of the tax year, and that is your main income. Perhaps you also have a side hustle, so you have business income, or you mainly just run business and the business pays you some salary, and that is how you make money. There's also freelance income. So there's people who are employed full time, but they also have some freelancing work that they do. Or you are just a freelancer full time. You don't have a traditional 9 to 5. You only do freelancing work. That is still income that you are earning. Rental income. If you have some property that you're renting out, you are receiving income for it every month. That forms part of your rental income. Interest can also be some sort of an income. If you have a savings account that you put money into and it earns interest, then you are earning interest income. And that all these types of incomes need to be declared to SARS. Foreign employment income, this can come in two ways. Number one, maybe you have relocated, you now live in a foreign country and you work there, you make a living there, so you have that income, then that is foreign employment income. Or you live in South Africa, however, you work for a company that is abroad and they pay you a salary every month, some sort of compensation for the work that you do for them, then that is still foreign employment income. Foreign pension, I don't want to touch on this honestly because I think it gets a bit complex and I don't think a lot of us um, dive into foreign pension options before we fully explore our local options. I think the most common investment in terms of pension funds is us looking for local pension fund options in terms of investments, right? So I'm not going to touch much onto this. And then investment income, maybe you have some shares there on Easy Equities, you have invested something and you earn dividends, right? You have dividends that are paid out to you every now and then, quarterly, bi-yearly, or once a year. That is income and it should be declared under your tax return. So when you think of what you need to declare in terms of income on your personal tax return, you need to think of all the ways that you are making money, including the interest that you're earning in your bank accounts, including the dividends that you're getting for your investments. Most common documents that are needed when you submit your tax return. So you would notice that if you seek help from uh, an external party to help you with your tax return, or if you are picked for an audit by SARS, then you are requested to submit a few documents. So you would understand that if I am a tax practitioner and I am offering a service to you to submit your tax return for you, I have no idea. When I meet you and you're asking me for my service, I have no idea what you have, right? So you could have lots and lots of investments that you earn dividends from. You could have lots of money sitting in savings accounts where you are earning interest income. I have no idea. You could have 10 properties that you are getting rental income from. I have no idea. And when it is your responsibility then to disclose that information to the person who is helping you. And at any point, if you fail to disclose these things, and that person submits the wrong information because you failed to disclose to them all these things, you will be the one who is held liable. SARS will never hold an external party liable, a third party liable for any omission that you did. Okay. So just a side note. So common documents needed, an IRP5. If you are employed for a 9 to 5 job, you will be asked for an IRP5, whether through audit, if SARS picks your return for an audit, or by the professional who is assisting you with your tax return. Medical aid certificate. If you say to me, Siphesihle, I had a medical aid during the course of the year, of the tax year, remember, we need to apply the tax year that I explained earlier, right? So if between March 2025 and last day of February 2026, at any point you had a medical aid there, then I would need the medical aid certificate. Or SARS would come back and ask for that. Retirement annuity certificate. If you had any retirement annuity contributions that you made between 1st of March 2025 and last day of February 2026, then you should have a retirement annuity certificate. A travel logbook. If you have any travel related expenses that you would like to claim, then you should have a travel logbook that you have completed. Donation certificates. If you have made any donations that you would like to claim as a deduction to SARS and submit as part of your tax return, then you should have a Section 18A donation certificate, right? Investment certificate. If you did any any investments during the course of the tax year, then you should have certificates for that. IT3 certificates, rental income records, all these things you should ultimately, the point I'm trying to make here is everything that you are submitting to SARS, anything that you are claiming, you should have somewhat proof that you are able to provide. For rental income records, if you were making rental income during the tax year, then SARS would normally pick you for an audit. They would request supporting documents, and the most common ones that they request for is they will ask you for a lease agreement. So if you are doing things then Dagi way of just saying, okay, when are you gonna stay here and you're gonna give me 1.5 a month, and then yeah, just tell me when you want to go. That might not work for your tax return audit. Okay, they would normally ask you for your lease agreement, and the lease agreement is where they're trying to see what is the amount that you and this person agreed on, and when did you start renting out this property. And based on what the lease agreement says, they want to see that for the period that you are declaring the rental income, if the lease agreement says it started in May 2025, then they want to see that you also declared the rental income from May 2025 and not from September, right? You didn't give yourself a discount there by SARS. They want to see that if the lease agreement says this person is going to pay you an income, a rental income of 10,000 Rand, you have also declared a monthly rental income of 10,000 Rand. And you didn't just declare 5,000 Rand instead of 10,000, right? So they cover their bases. They do their own little investigation. So they would normally also want to see the expenses that you're claiming. So you cannot claim the bond repayment for your property. If you are still paying for the bond of that property and you're renting it out, you cannot claim the bond repayment amount as a full deduction, as an expense, right? However, the interest that the bank charges you on that bond every month is what you can claim. So from March 2025 and until February 2026, only the interest portion on your bond is a claimable expense. Your levies, you can claim that as an expense. Your rate and taxes, you can claim that as an expense. Your water that you pay to the municipality, if you pay electricity as well to the municipality, you can claim that as an expense. The commission that you pay your agent who manages your property on your behalf, you can claim that as an expense, and therefore it reduces the amount that you will be taxed on. So let's say you get in a rental income of 10,000 Rand, and all these expenses that I've just mentioned add up to a 10,000 Rand. Then you have made zero profit on this rental property, and therefore it actually does not make or break your tax return. It makes no difference to your tax return. Let's say you get 10,000 Rand from this rental property as income, and your expenses add up to 12,000 Rand. Then you have made a 2,000 Rand loss. And usually, SARS does not allow you to reduce your total taxable amount by this amount. It just says you will carry the amount over to the following year. If next year you make a profit on your rental property, then you will reduce that profit by the 2,000 Rand. Okay. So in terms of rental income, those are some of the things that I need you to be aware of. All the other ones you are usually provided for by the third party. So rental income, always make sure that those documents are kept safe, because you need those supporting documents to prove the expenses. Those documents, number one, they are kept filed safely somewhere in an electronic device, preferably, because when it's just a paper, it can come off, right? So I would say always make sure that you file them somewhere in your laptop, in your emails, just keep them together somewhere safely in time for the tax return season. All the other ones you are able to get from third parties. Your IRP5 you will be given to by your employer. It will also appear under your tax return when we pull your tax return. Your medical aid certificate will come from your medical aid scheme company. Your retirement annuity will come from the company that you pay that money to every month that handles your retirement annuity. Your travel logbook, you will have to do it. SARS has all the information on their website on how to make sure that your logbook is SARS compliant. You will have to do that. Section 18A donation certificate, you will have to get that from the NPO that you were donating to, right? So whoever you donated that money to, make sure that it's someone who is registered to give you that certificate, and they should be able to give you that certificate once you've done your donation. They'll give you that certificate and you'll have it for the tax year, for the tax return submission. Your investment certificates, IT3 certificates, those come from third parties. If you had, so you'll see at the end of the tax year, somewhere between when the tax year ends and when the tax season opens for us to submit, your bank will start sending you the tax certificates, and you look at it and you'll see them declaring like 250 interest income. They are supposed to give you that certificate if you earned any sort of interest income from maybe your savings account. Maybe you just had a lot of money in Cyril's economy. You happen to have a lot of money that you must share with us. You happen to have a lot of money in your bank account, and you were earning interest because you have a positive balance. Then that interest would form part of the interest that sits on your certificate that the bank would send to you at the end of the tax year, right? So you will see if you have a savings account, maybe you're accumulating interest in there, they will send you the tax certificate that shows how much interest you received for your savings between the 1st of March 2025 and the last day of February 2026. Same as your Easy Equities, they will send you the tax returns. Either it will be available on your Easy Equities app, or you will receive it via email. I think we usually get it via email. It'll show you the dividends that you received during the tax year between 1st of March 2025 until last day of February 2026. And that is your proof that you hold on to with dear life to submit to SARS if you need to ever make your case. That is what you will submit to any third party, a tax practitioner, whoever is helping you with your tax return. If you reach out to a service provider to help you with your tax return, they will want these documents. I spent a lot of time on documents because I need you to understand how important it is to have the right supporting documents for the things that you want to claim for. So, just touching on medical aid, there's one thing I forgot to mention. Usually, for outside of a medical aid certificate, you find that there are expenses that you covered, that you paid for during the tax year that were not covered by medical aid. So you did not claim them, or you claimed them and they refused to pay them. It's very important that you keep the receipts, the invoices, whatever supporting document that shows that you paid for this thing, right? It's very important that you keep it so that at the end of the year, when you want to submit that with your tax return and claim that money, you are able claim a deduction for that money. You are able to support to provide the proof. I want to assure you now, it, there is no decent professional who is going to submit anything to SARS without the necessary documents, supporting documents that we can prove, because you never know when SARS is going to pick you for an audit and what they will ask for. So we are always going to try and cover our bases. Before I even submit your tax return with the rental income, I'm going to ask you for all these supporting documents that I need. When I submit that thing, I want to be 100% sure that it is correct to the T, because I cannot afford for you to put me in a position where, and sometimes people don't do it intentionally. They just want to get it over and done with. They're like, hey, I think the rent is like 9.5, and the rent is 9.8. Then you've submitted wrong information to SARS. But no professional, no decent professional ever wants to be in a position where they have submitted something that they cannot stand by to SARS. If I submit it, I want to be able to fight for it and say, no, the reason I submitted that is, here is my proof. So I spend a bit of time here because I need you to understand the importance of all these documents that you hear people talking about, that you receive in your email sometime during the year, and you don't understand what they are for. Your medical aid certificate will show how much contributions you made towards the medical aid scheme during the course of the tax year. Same as your retirement annuity. There's something that those documents tell when you look at the document. So it's important that you keep them safe so that you are able to retrieve them and provide them when you need to. Okay, I'm going to move past this now. Tax deductions. This is where everyone gets excited. Ne? What are tax deductions? They reduce your taxable income. Okay, there's something that we call taxable income. It will be very difficult for me to explain it in simple language, but taxable income is the amount that your tax is then calculated on. So if the applicable tax percentage to your tax is 18%, taxable income is the amount that we will multiply by the 18%. So deductions reduce this amount. If your taxable income was supposed to be 50,000, but you have deductions of 10,000, your taxable amount, your taxable income is now sitting at 40,000 because the 10,000 rand of deductions reduced it by 10,000 rand, right? So it went from 50 to 40. And now instead of paying 18% of 50,000, you are now going to pay 18% of 40,000. So that's why tax deductions are important. And if you're wondering, there's this common conversation about how wealthy people reduce their taxes, they avoid taxes, whatever. This is the legal way to reduce your taxes. Okay, using tax deductions, they capitalize on the deductible amounts every year. So what are they? I just explained. They reduce your taxable income, and as a result, you then you pay less tax ultimately. Remember, I said 18% of 50,000 is probably more than 18% of 40,000. So ultimately, it reduces the tax payable amount that you would pay had they not been there. Examples of tax deductions: retirement annuity contributions. Your contributions towards your retirement annuity form part of the tax deductions. So they reduce your taxable income. Your business expenses, if they are applicable to you, perhaps you run a business. Remember, right at the beginning when we touched on income, we spoke about business income. Perhaps you run a business and you did not register it as its own entity, so you run it like a side hustle under your name, then the business expenses would form part of your tax deductions. Home office, everyone's favorite. From COVID, this was everyone's favorite. And this is like our worst nightmare because SARS will want your head, your last toe, your last pinky finger to prove that you can claim home office expenses. Home office expenses, they form part of your tax deductions if they are qualifying expenses. And usually some of the things that SARS will ask you for is they will ask you for a picture. Let me start with the ridiculous ones. They will ask you for a picture of your home office, right? And they want to see that your home office is an actual office. There is no bed there where your table is just sitting in the corner, right? They will ask you for a drawing of your property as well as an indication of the room that your home office sits in, and you will have to draw the property or get the plans if you have them and submit them and clearly indicate which room on this drawing or on this plan do you use as the home office. Remember, then you've also supplied the pictures showing the room with the laptops, the computers, right? The office table, the office chair. There's no bed in the room. There's no couch. It looks like an office except it's in your house, right? They will also ask for the square meters, the square meter of your total property, the total square meters of the house versus the square meters of this room that you use as an office. And then all your expenses, your home office expenses, will then be apportioned according to that ratio of, so let's say, ridiculously, let's say your home office is 5 square meters and your total house is 10 square is 100 square meters, then all your home office expenses will be apportioned according to that ratio. So if you buy a table and it's 5,000 rand, then that is 100% for your home office, right? It's your working table. You can claim 100% of that. But if you pay your helper in the house and the helper also cleans your home office, then if you pay your helper 2,000 rand in a month, you say 2,000 rand times 5 square meters over 100 square meters equals to the portion that you can claim as an expense. And that applies to all your expenses that are shared between the home and the office, that little piece room in your house that you call an office. That is how you split the expenses. The electricity, the Wi-Fi, you can't just say your Wi-Fi is a home office expense because you also use your Wi-Fi for Netflix and they know that, right? You can't just say your electricity is for home office expense because there's a geyser and you shower there, right? You switch on your other bedroom lights, you switch on the TV, you switch on the fridge. That is not home office, that is your home. So you apportion the expense. Your helper does not just come to clean that one room where there is an office in your house, right? She cleans all the rooms. So you apportion that expense. So all the expenses that are shared between you, the rest of your home and this home office, you apportion according to the square meters of this room versus the total square meter of the whole house. Okay. Travel expenses, those are other deductions. This is where people are pushing things that are going to end them in troubles. Guys, please don't cook your books. Please don't cook your tax returns. I'm begging you. There's actually a video that I saw this morning where someone is saying they know a few people who their tax practitioners had cooked the books last year, and they had a huge refund, and now this year they are owing SARS a huge amount. Please don't cook your books. It's not, you will never defraud SARS and get away with it for life. I can promise you that with my entire life. SARS will always be smarter than you. They will always get you. Their resources go far beyond where yours can go. Please don't think you can ever outsmart SARS. Okay, travel expenses. This will relate to the logbook. This is where, like I say, a lot of people are cooking illegal things. Please do not participate. I do not endorse it. I don't even do those things. You'll never come to me and ask me to cook your books for you so that you can get a refund. If SARS owes you, they owe you. If they don't owe you, they don't owe you. That's it. Wear and tear, this usually applies to like your assets. If you bought a laptop, then you are able to claim wear and tear on this computer that you have bought, and it's a tax deductible expense. Donations to approved organizations. Remember earlier I mentioned that make sure that the organization that you are donating to is approved and it's able to issue you with a Section 18A certificate so that you are able to claim that as a deduction on your tax return. Medical expenses. There's two ways. Number one, if you are on medical aid, you get what we call credits, right? These are these are applied. There's a way that they are calculated based on the number of months during the tax year, the applicable tax year that you were on medical aid, right? But just know that there is a tax benefit to having medical aid. You get credits, and those credits reduce your they stand there as a deduction on your tax return, and they reduce your taxable income. Okay. The second way is the expenses that I mentioned earlier, that you should keep the supporting documents, all the receipts, the invoices, all of that. Keep the supporting documents. You are able to claim those expenses as a deduction should SARS approve that they qualify for a deduction. Okay. Auto assessment. This is manual tax return. If you have been auto assessed, who qualifies for auto assessment? It's people with simple taxes. So if SARS is able to get hold of your information from third parties, and based on previous tax returns, they know that you don't get rental income, you don't have side hustles, you don't have all these other things, that they would not have any way of getting that information without you declaring to them, which is not entirely true. They have all the access to your bank account. They see everything. So just take note when you think of not declaring extra income to SARS, just always know that they have access to your bank account. They can see all the transactions that are happening in your account. But mainly auto assessments is auto assessments are issued to people with simple taxes. So your taxes are not complicated. You don't have the offshore investment. You don't have rental income that you need to declare with the expenses. Uh, SARS is able to get your information from your employer. They can get the information from the banks. They can get the information from the medical aid scheme, the retirement annuity, the easy equities, all these institutions that are able to give them your information. If your tax is set up like that, then SARS auto assesses you, right? And like I just said, they get information from all these third parties, and that's how they are able to issue the auto assessment, because they already have your IRP5. So they know how much your employer was paying you and how much pay as you earn was deducted from your salary. So therefore, they have your employment information. Then the bank has already told them about your interest on your savings. Easy Equities has already told them about the dividends. Remember when we started the session, I said Easy Equities would ask you for your tax number when you're setting up the profile. And this is where it plays a role. So at the end of the tax year, they are able to submit the information to SARS to say, Siphesihle with tax number 12345. This is how much we paid out to her in dividends, and they relate to shares in this company and this company and this company, right? Banks also have your tax number. They are able to submit your tax information to SARS at the end of the tax year, and they are able to say, Siphesihle has a tax-free savings account with us. This is how much she contributed in that account for the year, and this is how much interest she earned for the year. She also has a 32-day notice account. This is how much she contributed towards that account for the year, and this is how much interest she earned in that account. In Sipesihle's main account, she was doing very well in Cyril's economy. She maintained a positive account balance, and because of this bank account that she chose, when she has a positive bank balance, she's able to earn interest income on her bank balance. So this is how much interest income she earned. Your medical aid scheme discovery is also saying Siphesihle has a medical aid with us. She was paying a premium of 3,000 Rand all the way from March 2025 up until February 2026. So this is the total amount in contributions. She had a medical aid with us for the full 12 months of the assessment of the year of assessment, or they'll say she only had with us for 6 months, right? Even if you switched, the one company will submit their information, the other one will submit their information. It will all come together in the end. Same with your retirement annuity, they will submit the same to SARS, and SARS is able to say, I have all your information, my dear. I can compile this for you when you just need to look at it and verify that everything is correct. And then you tell me if you are happy. If you're happy, I'm also happy. We continue. So that is how auto assessments work with SARS. How will you know that you are auto assessed by SARS? You will be notified by SARS either by email or SMS. And you are also able to check on eFiling. If you have not heard anything from SARS, you're able to log in and see if you were auto assessed. Usually, I'm not saying this will be the case 100% of the time, because there's no way I've looked at every single taxpayer's profile, but usually right when you log in, they put it in your face to say, listen here, we've got this under control. We have auto assessed you. So you are able to check on e-filing and you will be notified by SARS either via SMS or via email. What do you need to do when you receive your auto assessment? Very, very important. Open your ears. When you receive your auto assessment, it's important for you to verify the information. So, number one, there's been common cases where your employer, remember, every month they take a pay as you earn from your salary, right? So, let's say they take 5,000 Rand from your salary every month for pay as you earn. What this is supposed to do is, if you if you will be owing SARS 60,000 at the end of the tax year based on the salary that you're earning from this company, then this company does a calculation which helps them to help you to say, okay, this person, based on how much we pay them and the deductions they have, they might be owing SARS 60,000 at the end of the year, right? Because remember, you're taxed on your full taxable income. I get so your salary is taxable, right? And then they say, okay, that 60,000, we have to divide it by 12. So every month we must deduct 5,000 Rand from this person's salary so that at the end of the tax year, they don't owe SARS anything, right? So this is where people get refunds or end up owing. Ne? If that calculation was wrong, and maybe they were deducting 5,000, but they were actually only supposed to deduct 4.5. Then at the end of the tax year, SARS says, no, man, this person only owes us 50,000. and you guys collected 60,000 from them. Therefore, here's your 10,000 winners Siphesihle. We are not here to rob you. We are gonna be fair, right? But if at the end of the tax year you owe 70,000, but your company only collected 60,000 in total for the total tax year, then you will be in a position where you owe SARS an extra 10,000 because all that pay as you earn that was collected during the year is not enough to cover how much you owe SARS. Sometimes it's your company's fault, and this can go both ways. Number one, maybe the calculation was wrong, so they were deducting the wrong pay as you earn every month. But when it comes to declaring what they deducted from you to SARS, they submitted everything correctly. So they didn't rob you in any way. So, and then other times, your employer on your pay slip, it said they are taking 5,000 rand from you every month. Therefore, when you pull your IRP5 or your tax return, you should be seeing there 60,000, I guess, for the full tax year because every month they were taking 5,000 rand. But you see that they only submitted 50,000. You should be seeing 60,000, but you're only seeing 50,000. Then all of a sudden you owe SARS, but it's because your employer on the pay slip it says they deducted 60,000 in total. They took 5,000 every month. Therefore, in total, it was 60,000 for the tax year. But to SARS, they said Bone, they only deducted 50,000. Then there's a problem there, right? Then you need to go back to your employer and say, no, look at my 12 months pay slips here, 5,000 March, 5,000 April, 5,000 May. Do you see? When you add it up, it goes to 60,000. Marawena, when you go to SARS, you said you only took 50,000. Where's my 10,000? Now SARS says I owe them 10,000. Please fix it. So this is where verifying your auto assessment information is important. You need to go back to your pay slips. Guys, please don't throw away your pay slips and say, nah, I never apply for that, so I'm not going to need this. You're going to need that. Ne? Keep them safe. You go back to your pay slips from the 1st of March 2025 to the last day of February 2026, and you add up all the pay as you earn amounts, and you check that what is sitting there on your auto assessment as pay as you earn, that total and the total from your pay slips for the full 12 months, those amounts must speak the same language. If the other one is speaking English and the other one is speaking Afrikaans, there's a problem. And you need to go back to your employer and make sure that they agree on one language. Your payslip is the correct one. Ne? Your employer must never say your payslip was incorrect. Then they must pay you back that money from your salary. Your payslip is the correct one. That's the amount that they claimed to have deducted from your salary. Therefore, all they had to do was pay it over to SARS. It was never their money to keep and take you out for lunch. No. Okay, so when you receive your auto assessment, you check that all your income has been declared. If there's an income there missing, maybe you have rental income, you need to resubmit. So that's how you correct your auto assessment. Your auto assessment would have been submitted by SARS. When you would have to go and submit a correction. So you are resubmitting the return with the correct information. If there's an expense or a tax deduction that is not on there that you want to claim, maybe you have additional medical expenses that were not paid for by the medical aid, then you want to resubmit so that you can claim those expenses. If you have rental income that you did not declare, then you want to resubmit so that you can declare that extra income. Okay, so if you've been auto-assessed, what do? You verify that the information is correct. If the information is correct, there's nothing more that you need to do. You are perfectly fine as long as it says the tax return has been finalized, submitted by SARS, you are fine. But if something is wrong on there, then you have to resubmit. So you resubmit a correction. Okay. Manual tax return submissions. Who must submit this? If you were not auto-assessed and you qualify to submit a tax return, then you must submit the tax return. You earn an income, you are paying tax on your salary, you were not auto-assessed, go submit your tax return. Where do you submit? You are able to submit on eFiling. You can do it yourself. You can ask a professional to do it for you, to help you, or you can also go to a SARS branch and do it there. By when do you submit? These are the deadlines that everyone seems to know outside of cooking their tax returns. 23 October 2026, if you are not a provisional taxpayer, then you should have submitted your tax return by this date. A provisional taxpayer is someone who makes any other income outside of a salary, a 9 to 5. Ne? And the reason you then become a provisional taxpayer is because a salary helps you pay your tax in portions. But if you make any other income outside of your salary, for an example, your employer does not know that you earn rental income. So that tax amount is going to shock you on the rental income that you are earning. At the end of the tax year, when SARS calculates how much tax you owe them on maybe your side hustle, that amount is going to shock you. So the provisional tax is to help you not be too shocked. So we then project how much you might be owing SARS at the end of the tax year. And we say, okay, 6 months into the tax year, you must pay half of the amount that we have estimated. And then at the end of the second 6 months, you must pay the other half, the balance of what we have estimated. And then when now tax season opens, we are reconciling everything. We are taking the salary that your employer gave you plus all your side hustle income, and then we are minusing the pay as you earn that your employer took from your salary during the tax year, and we are also minusing that provisional tax that you paid twice. Those two amounts are provisional tax that you paid. We are minusing them, and we are saying, okay, now are you in a position where there's still a little bit more that you need to pay to SARS, or does SARS owe you a refund based on all these tax income and expenses and deductions that you've claimed, right? So that is the difference between provisional taxpayers and non-provisional taxpayers. If you just earn a 9 to 5 and you just have medical aid, the normal stuff, you are a non-provisional taxpayer. But if you have a 9 to 5 plus a side hustle, a freelancing, even if you are doing these things full time and you don't have a 9 to 5, you are a provisional taxpayer. As long as you don't have pay as you earn being deducted from whatever income that you're making every month, you should be a provisional taxpayer, because you don't want to be shocked and get a heart attack at the end of the tax year when you have to submit and you are suddenly seeing this big amount that you owe to SARS. Okay. Common mistakes that happen. I know we are going a bit over time. Just give me 5 more minutes. Common mistakes that happen. People either over or understate. Sorry, that is a typing error. They over or understate the oh no, it's actually correct. Over or understatement of income and expenses. So if you overstate your income, it means that you only have income of 500,000 for the year, but you said you had income of 600,000. That can be a very costly mistake, because why do you want SARS to charge you more than what they need to charge you? The most common one, however, is the overstatement of expenses. So if you had expenses of 20,000 for the whole tax year and you're saying, no, my expenses were 50,000, therefore you must deduct 50,000 from my taxable income, that can be a very big mistake, because when SARS says bring your supporting documents and your supporting documents only add up to 20,000 and not 50,000, then SARS can cancel the whole thing and say, listen here, we are not deducting 50,000. That is not how much you can claim as a deduction. In fact, let us scrutinize the rest of your return and make sure that everything else that you submitted is correct. So now they start picking up on other things that they possibly could have let slide, right? So you never want to be in a position where you over or understate your income or expenses. And you'll remember earlier in the session, I said any decent professional who's assisting you with your return will always ask you for supporting documents, because they want to make sure that whatever that they're submitting is 100% correct. And this is where this comes in. I want to make sure that whatever that I'm submitting on your behalf is 100% correct. I am not overstating any income or expenses, and I'm not understating any income or expenses. Your income is as it is, and I can prove it. Your expenses are what they are, and I can prove it, right? Second mistake, claiming with no supporting documents. You must never do that. SARS does not like it when you reduce your taxable your taxable income, right? According to them, you must pay them as much as you can, right? According to you, you want to pay as little as you can. So if you want to pay as little as you can, you make sure that you have all the supporting documents that are necessary for when you claim those deductions. If you don't have a supporting document, SARS can say this expense does not exist, and you have no other way of proving that this expense actually does exist, and therefore you lose out on a deduction. So you end up paying more than what you needed to pay, and they win. You don't want them to win. So keep your supporting documents at all times and make sure they are safe and they are ready for you to claim when it's time for your tax return. Waiting until the deadline to submit. You call me 2 days before the deadline, you want to submit, you have rental income, I must look through the supporting documents and make sure that whatever we are submitting is correct. It's not going to work. You are going to miss the deadline. I am not going to not sleep at night because you waited 2 days before the deadline. You have a lot of time between now and when the tax season ends in October. You need to make sure that you do your things on time so that you give yourself enough time. If you have to go to the municipality and ask for invoices for the rates, then give yourself enough time for you to have to do to be able to do that should you have to do it. If you have to go and ask for any supporting documents that you don't have because they never give you the original invoice, then you want to make sure that you have enough time for you to gather that information. Okay, not updating details on e-filing profile. You need to make sure that your details are updated on your e-filing profile, your contact details, your email address, your cell phone number. Maybe you've been auto-assessed, but SARS still has your old number and your old email, and therefore they are sending you a communication. I know every year there's like a new person who I receive I get their SMS for auto assessment, and they always get a little nyana refund, and they don't even know because their message comes to me, to my number. So maybe you've been auto assessed, you don't even know because Sarah says your old number and your old email, and they are trying to tell you we have 2,000 Rand here for you, but your banking details are not verified. Can you log in and verify your banking details? And you don't even know because your details are not updated on your e-filing profile. So just always make sure that your details are updated on your e-filing profile. If SARS ever needs to get a hold of you, they must get a hold of you. Make sure that your banking details are also updated, because if you have a refund, automatically after about 2 or 3 working days, that money is processed into your account. You want to make sure that it's the correct account sitting there so that your refund does not delay. Not declaring all your income. This is a dangerous game. Don't play it. I will always tell you, don't play that game. SARS has access to your bank account. They know how much you're making. They can see when there's consistent income with a consistent reference number. They're like, hey man, this person gets 8,000 Rand every month, and it's always written unit 120 TFC. this looks like rental income. They give you a year, they give you 2 years, they give you 3 years, they give you 4 years. You are still receiving this income. It just keeps increasing. Every after 12 months, it increases. Like your rental income, you will apply that increase after 12 months. It increases, but you are still not declaring rental income. After a while, they say, listen here, from 2021 July until this date, you have been receiving rental income, and they allow they let it accumulate before they reach out to you. SARS will never reach out for you for a mere 10,000 rand yana of once off. They allow it to accumulate, they build the evidence, and then they come to you. So always make sure you are declaring all your income. Another common mistake, poor record keeping. This goes back to supporting documents. Make sure you keep all your supporting documents. Okay, we have come to the end of the session. These are my contact details. These are the services that we provide. I will now stop sharing my screen, and I will change the settings to allow you to unmute yourself and ask any question that you may have. Hopefully, I am able to answer your questions and you can leave with a bit more clarity. And if you're wondering if the session will be uploaded, I have started a YouTube channel for the company so that I can upload recorded sessions on there. So if you need to go back and rewatch this session, you will be able to do that. By the end of the week latest, it will be uploaded on YouTube. And you can go and rewatch as many times if you want, ask questions in the comment section, and I will try by all means to attend to them and answer. Okay, I'm gonna stop sharing my screen and then change the settings so you are able to unmute yourself. Okay, you should be able to unmute yourself, and you can raise your hand and ask whatever questions that you have. If you have no questions, then I will be happy to conclude the session. Annelisiwe, you can go ahead.
Thank you for this informative session, and for allowing me to ask a question.
Yes.
The question I want to ask is, are you available for online consultations since I'm not in South Africa?
Yes, I am. I am. So if you go on my website, you will be able to book a session, but you can also just reach out to me on WhatsApp and we can schedule one.
Okay, thank you so much.
Yeah.
So what would I have to collect in order for me to do my taxes
I
for my?
assume I assume it would be taxes for income that you're earning from outside South Africa.
Yes.
Okay, so number one, you should have a job contract for the job that you're employed to do, and you should be getting pay slips, right, for your monthly salary. So this is actually something that foreign income earners need to be aware of, because I think there's a bit of relaxation when it comes to keeping the pay slips, but you should be getting pay slips and you should be keeping them every month, because your pay slip is the perfect document that shows me how much gross income you received and how much tax you was deducted by your employer, your foreign employer, from your gross salary. All right. And then you should have a tax certificate or whatever they call it in that country for any taxes that you paid in that country. Okay, so those are the three main important documents. Outside of that, it's your normal, if you have a retirement annuity here at home or there, you should have the tax certificate for that. If you have medical aid that you're paying maybe for your parents back here in South Africa at home, then there should be a tax certificate for that. Any medical aid expenses, I mean medical expenses outside of not covered by the medical aid that are related to people who are dependent on you that you contributed towards those expenses, you should have supporting documents for that. Outside of those three main things, those are the other things that you should have if you want to claim for them. But the main three are your employment contract, your monthly pay slips for the taxable years, for the year of assessments that you want to submit for, as well as the tax certificate. If your tax certificate shows the gross income as well as the tax amount for the for each month, then it's perfect. We won't need the pay slips, but I need to know the gross amount each month as well as the tax amount each month. And the reason I say each month is, for an example, China's tax year runs from January to December, whereas our tax year runs from March to February. So if I only have the totals, then how do I know which amounts to exclude and include? And by what I mean by that is, then when I want the March to February following year, if I only have the totals, then I don't know how much to strip out so that I combine the two from the two tax returns to have the total amount that I need to submit on our side according to our tax year. I hope that makes sense. If you still have any further questions, you're welcome to reach out to me and we can discuss further. Tumzile,
Thank you so much.
you're welcome. Yes, Pumzile.
How are you, Siphesihle?
Hi, I'm good, thanks. How are you?
I'm okay. Thank you for the beautiful and informational session.
Yes.
I also have a question. For
Mhm,
example, if you, for example, I've got my salary account and I've got
mhm,
another account from another bank, which
mhm.
I normally put money for the stock file. Must I also declare that?
If please repeat that for me.
I've got an extra account which
Mhm,
I'm using for the stock file, not for my salary. So
mhm.
my question is, I also declare that account for the stock file.
So is this where is this account where you keep the money for for the money that is contributed by everyone in your stock file, or just your portion of the stock file? And do you earn interest in this account where you keep this money?
Okay, normally what we do is month to month where they put money in that account.
Mhm.
Immediately on the first, I transfer to the specific person that need to get his or her portion in that specific month. It's not the
Mm.
account where like the money stay there for 3 months, 6 months, 12 months. No, it's just they put money in that account immediately month end because other people they're getting paid on the 20th, other 25th, and then other
Mm.
31st. But on the first, immediately I move the money to the relevant person.
Oh, no, no. SARS won't be interested in that. SARS is interested where they can benefit. So if
Okay.
let's say for the full 12 months, the money is coming into that account and that account is a savings account and you are any interest in that account, SARS would not care that that money does not all belong to you and therefore the interest is not yours, right?
Okay.
SARS would say, wena, because of this money that was accumulating in your savings account, you earned an interest of 5,000. Therefore, we are adding 5,000 to your taxable income. So if you are not earning any interest on that money, you shouldn't be worried. However, if you do notice that before you transfer that money out, the money has already earned interest every month, then you should be worried because that money will then affect your taxable income. That
Okay.
interest. Yeah.
Okay. Thank you so much, my love.
You're welcome. Is everyone happy? Can we end the session? I think you've digested some
One more,
things. Yes.
one more from my side, please.
Yes.
Um, I wanted to get this a bit of clarity from your side,
Mm-hmm.
especially on foreign-based income
Yeah.
and in South Africa.
Mm-hmm.
What I've gotten to notice about people who work for South African companies as consultants, the companies don't want to get involved in their taxes.
Mm-hmm.
Ideally, what's supposed to be happening is they're supposed to be taxed at source.
Okay.
But you find that the South African accountant would say, no, I'm just going to give you all the 50 rands. Whatever happens you do with the money is your problem. So we have an issue of people having international funds coming from South Africa, but they're coming in untaxed. And also, we have issues of tax residency. And you find with ours that says if you were in the country for at least 103 days, which is half a year of the tax year, that's when you are really a tax resident of the country. But obviously, these people are consultants in South Africa, they're in South Africa every other day. So they're not tax resident here. They're not tax residents of this country, one. Two, they're not being taxed as taxed. How that complication, how then do we get to a point where we say no? But remember, they're also earning that money into South Africa. Remember that consultant. So, or someone is earning money outside of South Africa into a foreign bank, which SARS does not exactly have. But that person is always in and out of Africa, so I don't exactly.
Your sound is cutting there a bit. I think it keeps decreasing in volume, but I did hear almost everything that you said. So there would be two. You mentioned consulting. There would be two ways of earning income, right? Either you are a full-time employee or you are a consultant. Usually, even with our South African residents, when you are a consultant, then they just give you your full money and you will have the responsibility to declare your income to SARS, right? Regardless of your nationality. That happens with consultancy. But when you are a full-time employee and your contract states that you are a full-time employee, then the company would have the responsibility to deduct it. So are these people consultants or are they full-time employees?
Both.
Both, because it also depends on the how big the company is, right? So with small companies, you find that regulatory bodies are not paying much attention to them until there's like something alarming that draws their attention to those small companies, right? So a lot of attention is drawn to the big companies. So you find that someone who's working for Standard Bank and they're from Botswana, they are doing perfectly fine. Their tax is collected and submitted to SARS accordingly, and their books are in order. But you find that someone who's working for Tsolofelo Trading, I'm sorry if there's a Tsolofelo in the session, whoever's working for Tsolofelo Trading somewhere there in the supermarket and earns a salary, things are not being done correctly. And more often, these are the companies where even our South African people have problems with these companies, where your pay slip would say, I made an example in the session, I said, your pay slip would say they are deducting 5,000 from you every month. What is supposed to happen is if you are stating on my pay slip that you're deducting 5,000, then every month that 5,000 you must just transfer it to SARS. It's not yours. Yes. But you find that at the end of the tax year, the employees are faced with a situation where the company declared they were deducting 2,000 rand, whereas the payslip says they were deducting 5,000 rand. So the 3,000 rand went to them. It's not even money that you had in your account and you can say, hey, yeah, I chout that money, Shem, I do owe SARS. No. So I'm not sure how it can be resolved with the small companies, because in most cases, I want to be very honest, they don't even have money, Shem. Like, it's not even worth taking the legal route in most cases. You should take the legal route. You should advise your clients to take the legal route, because they do have somewhat a responsibility according to the laws in South Africa when it comes to tax. So so they should be reported to SARS. It's a long process, and in most cases, SARS, because it's also a government thing, and something there by government happens where they just don't want to do anything that takes too much effort. But ideally, SARS should be able to run after these companies and get them to comply and do things the right way.
No, I hear you. Thank you for that.
Yeah. Okay.
Okay.
All right. Is everyone happy? Can we end the session? If you are looking for my services, I'll just type my number in the chat quickly, as well as my email. You can just copy it and save it somewhere. Solutions.com. If you have me on your social media profiles, my number is everywhere as well. You will be able to get my number on either Instagram or TikTok, wherever you may have heard of the session. My number is there. You are happy to reach out and ask your questions. I would encourage everyone to try and Google things before you reach out to a professional and ask questions. And the only reason I say that is it's the tax season. It's the tax season. I run my business full time. So obviously I'm trying to earn enough money to cover my bills for some months, right? And you find that when you are coming with a question that is easily available when you Google it, then I'll probably take like 2 weeks to respond to you because I'm genuinely busy with work. So just try to do some research before you just come and ask a question. And then by the time you ask a question, ask more technical things that you genuinely are struggling to understand with the information that is available to you. If you need any of my services, you're welcome to reach out on WhatsApp, on email, on my website, Small Entity Solutions. You will find me on Instagram, TikTok. I have a website and I have WhatsApp. Okay. Thank you so much for joining, everyone. Good luck and good night.
Thank you, Night.
Night, night.